I just came back from a travel where I had a series of meetings with bankers from a country that most people online tell you to completely avoid. A place that gets labeled as controversial, high risk or not worth it. And yet, after sitting down face to face with banks, compliance teams and senior relationship managers, I can tell you this very clearly. Most people are wrong. And not just a little wrong, they're completely misunderstanding what's actually happening on the ground. In this video, I want to explain which country I'm talking about, why it's been misunderstood for years, why offshore banking there has quite improved, and why in 2026 this jurisdiction is becoming more interesting again for people who care about banking stability, access and flexibility. I'm Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. The country I'm talking about is Panama. And before you switch off, because you've already heard all the horror stories, let me explain why Panama deserves a second, more rational look. Panama is not just a random offshore jurisdiction, it's a financial, trade and logistics hub for the entire Central American and Latin American region. It has a dollarized economy, strong ties to the US, and a banking regulator that, whether people like it or not, has been forced over the last decade to clean up, professionalize and modernize its system. Panama City is not Miami, and it's not Singapore, but it is the closest thing to an international financial city in Central America. And that matters, because when geopolitical instability increases, when correspondent banking relationships get cut, and when smaller countries lose access to international systems, hubs like these tend to survive. Now, one of the first things people say is Panama is a tax haven. That's simply incorrect. Panama is a territorial tax system, which means residents are not taxed on foreign sourced income. But Panama has corporate tax, personal income tax, VAT, capital gain tax, property tax. This is not the Bahamas, it's not Bermuda. It's a country that uses tax policy to attract investment, not a zero tax black hole. Another argument you hear all the time is Panama is a blacked list. This is where people mix fear with half information. There are 4 lists that actually matter in international banking. The EU list of non-cooperative jurisdictions, the UK high-risk list, the FATF list, and the OFAC sanctions. Panama appears on one of these, the EU tax list. And what does that mean in practice? It can sometimes cause additional scrutiny or delays when moving funds through certain European banks, but outside of the EU, Panama is largely a non-issue. UK banks, US banks, and many international institutions process Panama-related transactions daily without any problem, as long as the activity is legitimate and structured properly. The real issue isn't the country, it's the bank you choose inside that country. This is where most people get it wrong. They think Panama banking is unsafe. No, bad banks are unsafe anywhere. A good bank is defined by liquidity, capital adequacy, conservative lending practice, clean balance sheet, transparent audits, and strong correspondent relationships. And Panama has banks that meet those criteria, especially banks that avoid aggressive customer lending and excessive exposure to local real estate bubbles. Now, here's the part that most people don't realize. For years, Panama had 3 main problems. Reputational damage after the Panama Papers, pressures from the correspondents, and very high minimum deposits, sometimes $250,000 to $500,000. That made no sense for most international clients, and banks realized this. Over the last couple of years, several Panamanian banks reviewed their positioning. They looked at competition from Singapore, the UAE, the Channel Islands, and even Switzerland. And instead of raising barriers, they adapted. Today, we're seeing minimum deposit in Panama ranging from as low as $5,000 up to $50,000 for solid, reputable banks. That's a major shift. And no, this isn't because banks are desperate. Quite the opposite. It's because Panama's roles as a transit, trade and logistics hub make it strategically important. Correspondent banks don't just walk away from Panama the way they sometimes do with smaller islands or less relevant jurisdictions. Now, let's address another myth. You can't open bank accounts in Panama remotely anymore. That is categorically false. Remote account opening is absolutely possible for the right profiles introduced by the right introducers. Foreign residents, international entrepreneurs, offshore companies, holding structures, foundations, and even Panama entities can still open accounts without stepping foot in the country, but not by clicking random application forms online. And this is where the difference between theory and reality matters. Yes, you can try calling bank yourself, jumping through switchboards, explaining your structure in broken Spanish, sending documents back and forth for months. Some people eventually succeed, most don't. And when they fail, they often damage their profile for that bank permanently. This is why in 2026, banking is no longer about can I apply? It's about should I apply, how and with whom? Globally, we're entering a period where financial systems are tightening. Geopolitical tensions, sanctions, capital controls and regulatory pressures are increasing. We've seen it in Europe. We've seen it in emerging markets. We've seen it with the banking cases in the UK, Canada and Australia. The lesson is very simple. Money is not just about where you earn it. It's about where you store it, how you access it, and how resilient your banking setup is when systems get stressed. Panama is not a magic solution, but used correctly with the right banks and the right structure, it can be a very solid piece of an international banking strategy. And that's the key word, strategy. Not hype, not shortcuts, not easy accounts. At GloboBanks, we don't sell countries. We assess profiles. We look at your nationality, residency, business activity, transaction flows, risk exposure, and long-term goals. Only then do we decide if Panama makes sense or if another jurisdiction is more appropriate. Sometimes Panama is the answer, sometimes it isn't. And that's exactly how it should be. If there's one takeaway from this video, it's this. In the next few years, banking will become more selective, not less. The people who plan ahead will have options. The people who chase easy solutions will eventually get stuck. Panama today is not what people think it is, and that's precisely why it's worth understanding it properly. If you need more information or if you'd like to jump in a call with one of our managers, you will find the link below and you can book your call to assist you and see if Panama works for you or maybe other jurisdictions is better for your single specific case. Let's see in the next video.